Now, with the devaluation of the Chinese yen, South African stock markets suffered from heavy losses with the fall in the value of the rand by almost 8%. Well, to discuss how China's pivot twists South Africa's prospects, earlier, Chris Bishop spoke to Sean Hagedorn, an independent strategy advisor. Take a look.
Sean, you wrote a very strong article in the press, which we've been perusing here, on how do you think, to answer your question, China does pivot, does twist South Africa's prospects?
Well, South Africa's economy is extremely reliant on extracting resources, and I think it's pretty easy to argue now that it's excessively reliant on that. And the other sort of twin engine of growth has been domestic consumption, and that sector is also overly taxed through high consumer indebtedness. So that makes the slowdown in China's growth and the restructuring of China's economy all the more perilous for South Africa's economy, and then South Africa's economy needs to adjust structurally.
Sean, isn't it a case, though, we're comparing apples with pears a little bit? I mean, China doesn't have an elected government. China is a highly controlled society. China doesn't enjoy a lot of the freedoms that are enjoyed here in South Africa. I mean, for instance, when they built the Three Gorges Dam, they moved something like 1.2 million Chinese people to make way for it. That would have been a nightmare to execute here, purely because of the freedoms people have. Aren't you comparing apples and pears?
Right, there's a great deal to that, and you could also make the point of the one-child policy. You couldn't do that anywhere else. So where China is very, very strong, it goes back literally a couple thousand years, if not longer, is they have exceptional institutional capacity. It's part of their culture. It's a real strength. And also, quite interestingly, for the shifts they're trying to now manage towards a more domestic consumption-based economy, those strengths may not be nearly as effective as they have been with their emphasis on fixed asset investments and their emphasis on manufacturing-led export growth.
I mean, one question I have for you also is, how can economies here in Africa affect their growing business partner in China in terms of economic influence and kick-starting economies to get us through this kind of depression that we're suffering at the moment?
Well, I think the clear message, Chris, is that China is going to be a bit less important. Obviously still very, very important because so many economies in Africa are commodity and extraction based. But going forward, they need to diversify and be less reliant on exporting commodities to China. And they need to structurally adjust, and the political economies need to structurally adjust to accommodate the changes in China.
A question I have also for you, somebody who's studied this, is how much do you think China's actually leaving behind here in Africa in terms of development? I mean, the Chinese, they come in, they do their business, they keep themselves to themselves, they don't preach to the leaders of Africa about what they should do when it comes to governance and democracy. But in terms of a legacy, how much do you think Chinese business is leaving that's tangible in Africa?
I think there'll be just amazing changes there. It's going to get very interesting now. If you look at it from across the sort of supply chain, so they access resources in Africa, basically looking the other way in terms of many of the governance issues, and then they sell manufactured goods to the West. And so now they're going to be playing down the importance of accessing commodities because they're going to be ratcheting down their fixed asset investments in China. So at the same time, they're going to be focusing on lending into Africa through development bank sort of activities. So that aligns their interests more with the West. And the focus on good governance will be more important for China going forward.
And one other point, I mean, I'd like to make, I was talking to one of my colleagues the other day, whenever do you see a Chinese business person photographed or quoted or seen anywhere in the media on this continent? It is quite remarkable. And you think this is a strategy, or do you think this is just the way they do business?
Just to put that in perspective, so I don't think it's so much strategic, or I mean, people can look at that however they want. Keep this in mind, as recently as 1993, China was still a net exporter of oil. Their economy's grown so much that they've had to scurry about very quickly to develop supply chain relationships. And basically the West had tied up the more desirable supply chain relationships. And what China responded to that by developing kind of a modus operandi of aligning with what the West would consider to be rogue nations. And that was never really an altogether coherent strategy. It's fundamentally problematic when your customers are sort of the country club set, if you want to look at it that way, across the West, and then you're accessing the raw materials from sort of the rogue thug elements. And now China has arrived. I mean, it's already arrived, and now they're part of the country club set, so they have to manage that transition now, that reality.
I mean, you mentioned in your article as well, you said that there's a huge reliance on trade, Africa supplying resources to China. You're saying that that's could be a bit of a problem in the future in terms of the way the economies work here.
Well, South Africa in particular, we can see that clearly, that the numbers don't work going forward. I mean, there really has to be change. Now South Africa is probably the easiest to see it. Also, South Africa, obviously the most industrialized and the most diversified economy, certainly in sub-Saharan Africa, if not all of Africa. And so the challenge now is that you're looking at prolonged stagnation, particularly on a per capita growth rate basis. I mean, if you're getting 1.5%, maybe 2% growth, and the population is growing nearly at 1.5%, and the labor force is growing at that rate, that's prolonged stagnation. And then what happens is you don't make the tough decisions as things get tougher, and then you get a downward spiral. So what you want to do is you want to get ahead of the curve and make a lot of tough structural changes quickly. And China's doing that, and South Africa and countries across Africa, particularly those commodity-based, need to do the same.
You also mentioned that governments in Africa, especially this one in South Africa, have got a challenge to change the way they run their politics. What exactly did you mean by that?
Well, sort of the natural state of play among humans, whether, people look to advance their own self-interest, and you get that in representative forms of government as well in business, and so factions form, and so there's a natural inclination towards patronage anywhere in the world, and a lot of it is very open as part of the political system. But what happens is people run their numbers on a commodity-based economy, expecting, routinely they expect commodity prices to stay stronger and bull markets to continue. And then when they start to contract, you have very serious problems. And that's what's happening now. The numbers don't work going forward. There really needs to be the tough transition to focus on competitiveness, which opens the door to really substantial challenges if you consider the structure of the tripartite alliance.
Now, Sean, you're an independent strategy advisor. If you were an advisor to heads of state in Africa, what sort of advice would you give them on how to deal with this?
Well, that's a really big question. And they have to accommodate their own factions. I mean, standing back, I can say independently, you should do this, this, and this. But they have, whoever they are, running whatever government they're running, they have certain support groups, and you have to sort of trample your political loyalties oftentimes to move forward. In South Africa, again, it's a pretty obvious context in that you have the South African Communist Party, and you have the unions as part of the tripartite alliance. So you need to find a way to align interests with the business community, because ultimately, the world is structured as one big economy globally, but politically it's on a nation-state basis, and so you have to manage the challenges that reside there.
I mean, one thing a colleague of mine, a fellow journalist, a cynical journalist, I hasten to add, we were talking about the China question, and he was saying that while governments in Africa are arguing about the past, Chinese business is cleaning up. How far true do you think that is?
Oh, absolutely. I mean, I would jump up and shout that people need to think about that. I mean, I'm actually very optimistic in terms of Africa and South Africa going forward, but only after a very substantial transformation, structural shifts, and focusing on the future. The manufacturing-led growth is over, and really all prosperous nations got that way through manufacturing and or trade, and that path isn't really available any longer. China caught really the last wave of that, but there'll be a lot of change in the future, and African countries can position themselves successfully.
There's often been a point that's been raised on the continent that perhaps governments in Africa should be driving a harder bargain and perhaps getting more out of China in return for the resources that they're giving. What do you say to that?
Absolutely, I agree. And it's easy, as an independent strategist, sitting here in Cape Town to make these points. It's very difficult. But really, the way to get ahead is just playing east off west. There's lots of opportunities to do that. It's not easy. It takes a lot of institutional capacity, and then that's where you run into. You have politics are managed basically at a national level, and economics is international. But those challenges can be managed, and there are opportunities. And just along those lines, the other thing is compare and contrast with China. China is as important as they are, and as much as they affect global markets, that's not where the lion's share of discretionary income is. That's still in the West, and basically China has positioned themselves between where the commodities are and where the purchasing power is along the supply chains. And the leaders across Africa need to take a fresh look at that and see how they can position themselves.
And that was Sean Hagedorn, an independent strategy advisor.